Here is the Treasurer.
How are you, Shane? I'm going to read from a statement, go through a few slides and then happy to take questions. The Australian economy is in fundamentally good shape. We are on track to record our 28th year of consecutive economic growth, a remarkable achievement. The unemployment rate has fallen to 5%, the lowest level in 7 years, and to a remarkable 3.9% in our largest state, New South Wales, a level that hasn't been seen since the 1970s. More than 1.2 million new jobs have been created under this coalition government, with the number of women now in the workforce at a record high and the gender pay gap at a record low. The number of people, young people, aged 15 to 24, who got a job last financial year is the highest on record. The growth in government spending has been reduced to its lowest level in 50 years. And the proportion of working Australians, working age Australians who are on welfare is now at its lowest level in 30 years. Tax cuts have been provided to more than 95% of taxpayers and more than 3 million small businesses. New opportunities have been created through free trade agreements for our businesses, including the most recent one signed with Indonesia this week. Since the coalition came to government, our free trade agreements have moved from covering 26% of our two-way trade to now over 70%. Our AAA credit rating has been reaffirmed, and we are one of only 10 countries in the world to have a AAA credit rating from the 3 leading credit rating agencies. Significantly, next month we will deliver a budget surplus, which will be the first budget surplus in over a decade. And we're continuing to provide record funding for health, education and infrastructure for the projects that people need today and into the future. Today's national accounts show that the Australian economy grew by 2.7% in the 2018 calendar year, which is consistent with trend growth. Australia continues to grow faster than any G7 nation except the United States. For the December quarter, real GDP grew by 0.2%, which was within the range of market expectations. At a through-the-year rate of 2.3%, this does represent some moderation in growth on the back of strong results that were observed in the first half of 2018. The moderation in part reflects the impact of the drought, lower mining investment, and as we continue to move from the construction to the production phase, as well as a decline in residential construction activity from record levels. Importantly, nominal GDP continues to be strong, growing 1.2% in the quarter to be 5.5% higher through the year. This is benefiting in part from a higher terms of trade. Terms of trade is up 3.1% in the quarter and 6% through the year. Household consumption continued to contribute to the growth in the economy. It grew by 0.4% in the quarter and 2% through the year, with 12 of the 17 consumption categories recording growth in the quarter, including health, education, food, clothing and footwear. Households are benefiting from solid gains in the compensation of employees, which measures the National Wages and Salaries Bill, increasing by 0.9% in the December quarter to be 4.3% higher through the year. The Australian Bureau of Statistics notes that this is higher than the 5-year average growth of 3.4%. Through the year growth has been above 4% for the past 5 quarters. The quarterly increase in the COE, or the compensation of employees, was driven by strong employment growth. Over the past 12 months, more than 270,000 new jobs were created, and more than 8 out of every 10 of these jobs were full-time. Strong employment outcomes have been accompanied by high participation rates, particularly for women, with female participation rates at a record high. And with the unemployment rate declining to 5%, the proportion of working age population aged 15 to 64 in work is now at a record high. New business investment grew by 0.7% in the quarter. New non-mining investment increased by 2.4% and is 4% higher through the year. New non-mining business investment has benefited from strong business conditions over the past several years and the government's legislated tax relief for small businesses. There is also continuing evidence that private business investment is benefiting from increased public infrastructure investments as firms invest in machinery and equipment to deliver these projects. Last week's CapEx numbers showed firms are upgrading their outlook for non-mining business investment. Mining investment fell in the quarter, detracting 0.2% percentage points from growth, with the last of the major LNG projects nearing completion, notably in the Northern Territory and Western Australia. As these large projects are completed and production ramps up, exports will continue to support growth. New public final demand across all levels of government rose by 1.6% in the quarter to be 6.3% higher through the year, contributing 0.4 percentage points to real GDP growth. Public consumption grew by 1.8% to be 5.6% higher through the year, and growth continues to be supported by the transition to the National Disability Insurance Scheme, as well as increased spending on health services and residential aged care. The government continues to guarantee the essential services that Australians rely on. New public investment grew by 0.8% in the quarter to be 9% higher through the year. This strong growth in public investment reflects ongoing work on major infrastructure projects to support the needs of a growing population. Public infrastructure will continue to be underpinned by this government's $75 billion transport infrastructure rollout. A strong pipeline of public engineering work is expected to support activity. Inventories contributed 0.2 percentage point to growth over the quarter, partially reversing the 0.3% detraction in the previous quarter. Dwelling investment reached a record level in the September quarter before falling 3.4% in the December quarter, with the softening observed in building approvals starting to flow through to construction activity. Dwelling investment is 2.5% higher on the through the year basis. Net exports detracted 0.2 percentage point from growth in the quarter, with exports falling 0.7% in the quarter, due in part to the impact of the drought. Significantly, farm GDP fell by 5.8% through the year, with the Australian Bureau of Statistics noting that drought conditions also affected food manufacturing in the December quarter. Exports continue to make an important contribution to Australia's economy, with exports 4.7% higher through the year. This was driven by a strength in services exports as strong demand for tourism and education services continues. Services exports are now 9.7% higher through the year, the fastest growth since the June quarter in 2017. Company profits increased by 3.2% in the quarter to be 9.8% higher through the year, largely reflecting strength in mining output and commodity prices. Commercially viable and profitable companies are critical to job creation and the health of the Australian economy, particularly given almost 9 out of every 10 jobs are in the private sector in this country. Improving the incomes of wage and salary earners does remain a core focus for the government. Average earnings in the national accounts increased by 0.5% in the quarter to be 1.7% higher through the year, which was an increase from 1.5% through the year in the September quarter. The wage price index for the December quarter is up 2.3% through the year, which is the equal fastest rate in 3 years. Wages can be expected to rise further as strength in labour market conditions continues. This view was reinforced in a recent statement by the Reserve Bank of Australia's Governor, who said, and I quote, "Wages are rising more quickly in almost all industries and in all states than they were a year ago. This is good news and we expect this gradual lift in wages growth to continue." Disposable income will also be boosted by the announced tax cuts. In the December quarter, real net national disposable income per capita was up 0.8% and 2.1% through the year, and this is faster than the 1.7% 20-year average. The strength of the Australian economy is the result of sound economic management. The International Monetary Fund, the OECD, and the credit rating agencies have all praised Australia's economic performance, calling it robust. It is now more important than ever for Australia to stay the course with the government's plan for lower taxes, more trade and more jobs, and record spending on infrastructure. The product of our plan is to deliver more jobs, a stronger economy, a surplus budget, and the essential services that Australians can rely on. I'll now just briefly turn to the slides to take you through some of the things we've referred to. The first is real GDP growth for the calendar year, and as you can see, 2.7% for 2018, which is pretty favourable compared to recent years and above the 10-year average. It really has been a calendar year of two halves when it comes to growth. Strong quarters in March and in June, and less than that in the September and December quarters. As I said, off the back of a slowing in housing construction and also the impacts of the drought. The next slide is the contributions to real GDP growth. And as you can see, the dwelling investment, the fall in construction activity is having an impact on the overall GDP numbers and the net export numbers, with farm GDP down nearly 6%, is contributing to that. And the other positives that contributed, though, to the GDP growth were obviously in public final demand, new business investment, and that's the non-mining side. Household consumption was up, and obviously the change in inventories. The next is a more granular breakdown in terms of the industry contributions to growth. And as I mentioned in my opening statement, the ABS has acknowledged that what's happened in terms of the drought has not only impacted agriculture, but it's actually also impacted on food manufacturing and therefore that part of the story. Services continue to be strong. The next slide is the consumption by category, the 12 out of the 17 that is up. As you can see, they're predominantly non-discretionary, but there's also some discretionary there in terms of hotels, cafes and restaurants are up a little bit in terms of recreation and culture. The next slide is the story about dwelling investment, which fell 3.4% in the quarter and coming back to where it is in terms of the 10-year through the year average. The next slide. This is the story of mining and non-mining. As you can see, non-mining investment continues to be through the year pretty strong at 4%, well above what the 10-year average is, and not bad, strong quarterly growth at 2.4%. Mining, as we move away from the construction phase into the production phase, those big LNG projects in Western Australia and Queensland and the Northern Territory. The next slide is the new public final demand. This has been a strong contributor to growth, and as you know, new public final demand reflects both consumption, which is what I was talking about with the NDIS, as well as investment, where we're seeing infrastructure investment. This is quite telling for the upcoming budget. This shows you the nominal GDP, which is obviously determining government revenues, taking into account the terms of trade and the commodity prices, is pretty strong. 1.2% for the quarter, well at 5.5%, well above the 10-year average. The next slide shows that wages and profits have tended to be pretty consistent as overall share of income. Obviously the wages are the bulk of that. And then the last slide shows where we compete. Now it's important to point out here, both on a through the year terms and on a calendar year terms, Australia is second only to the United States in terms of our growth, in terms of our growth compared to other countries who may be in the G7, like the United Kingdom and Japan.
Treasurer, why would people have confidence in the government, given that since Malcolm Turnbull was replaced, the economy's grown by 0.5 percentage point and it's now in a GDP per capita recession?
Well, the economy and its fundamentals are strong. The fact that we are growing at a faster rate than any G7 country except the United States is testament to that. There are some positive stories out of this set of national accounts. I referred to nominal GDP at 5.5%, terms of trade up at 6% through the year. You're also seeing the compensation of employees being above 4%, and you've also seen non-mining investment at 4% through the year. There's some good stories, but Shane, what the economy needs is a steady hand. What the economy needs is to continue with the strong economic plan, which is delivering record jobs growth. And our plan, which includes more trade, and our plan, which includes more jobs and more infrastructure investment. That is what is delivering a strong set of growth numbers compared to other countries in the world. What the economy cannot afford, what Australia cannot afford, is $200 billion of new taxes, which is what the Labor Party is promising to do. Could you imagine the impact on household consumption of Labor's retiree tax, ripping $55 billion out of the hands of retirees and therefore affecting their disposable income, as well as the impact on construction activity, which will come from Labor's housing tax.
Surely the only number that people care about in these figures, ordinary people, will be the wages figure. We see company profits going up by 9.8%, you said that yourself, wages by 1.7%. Aren't we in a wages slump at the moment, and what can the government do about that?
Well, the truth is that wages have had the biggest jump in 3 years, at wages price index of 2.3%. And you've heard from the Reserve Bank Governor that they are beginning to pick up more quickly than they were in the previous year, and he's seeing that in all states and in all industries. And in particular industries like health, we have started to see higher wages. What is really important out of these numbers is the average earnings picking up again from the previous quarter. But the story for the Australian economy is not only that wages are starting to pick up and that the compensation of employees has increased, but also that there is strong jobs growth. We have seen 1.2 million new jobs being created, and as I referred to, Chris, more women getting into the workforce than ever before. You're more young people getting a job than ever before. That is a very positive story. And what we would like to see is wages increase further, and what the Reserve Bank Governor has said is we are on the right trajectory.
On what he said today, though, Treasurer, it was quite interesting because he did talk about, saying he expected wages to increase, but then he also said, this is similar to what we've seen internationally in a number of countries, including our own. There is a growing tension between strong labour market data and softer GDP. He's effectively saying that you can no longer expect unemployment or a tightening employment market to produce the GDP benefits that we have expected traditionally, and that goes to wage growth. So it's not quite as rosy as you say.
Well, what I'm saying is that we want wages to increase. The Reserve Bank Governor has said that is the trajectory that we're on, and we saw the biggest jump of 2.3% in 3 years. But the key here is as the jobs market does tighten and there is more competition for labour, and we've seen very strong jobs growth, you will see that impact on wages. But what the workers of Australia can't afford is Labor's $200 billion of new taxes, which actually will drive their wages down. That is an absolute critical point. If you are going to hurt construction in the housing sector, if you are going to hurt retirees by giving them less disposable income to spend on consumption, you are going to affect the overall health of the Australian economy. So this is exactly the worst possible time for Labor's $200 billion of taxes.
Would you concede now there's a credible argument for an interest rate cut?
Look, the issue of monetary policy is one for the Reserve Bank Governor, and he has spoken numerous times about that dynamic.
Treasurer, just back to Shane's earlier point, 2 consecutive quarters of negative per capita GDP growth. Does that mean a per capita recession, and does the economy need stimulus?
The economy, the fundamentals, David, are in good shape. And as I said, GDP growth is at 2.7% for the calendar year. And whether it's on the through-the-year terms or on the calendar year terms, it is stronger than what we're seeing from any G7 country. But we're not heading for that. What we are heading for is a continued economic growth. But if the Labor Party have their chance to implement $200 billion of taxes, that's nearly the size of the New Zealand economy. $200 billion of new taxes is nearly the size of the New Zealand economy, and that is what they're going to layer over the Australian economy. And the Labor Party used to believe in a tax to GDP ratio. They used to believe in a cap to the amount of tax you could spend. But now they no longer believe in that. This is the worst possible time. The Australian economy cannot risk $200 billion of new taxes, which will hurt people's wages and hurt people's jobs growth.
Uncertainty drives down confidence and it drives down growth. What responsibility do you and the government take for driving down that certainty and confidence?
Well, as I've said, we've seen the fundamentals of the Australian economy remain strong. We have seen 2.7% GDP growth for the calendar year. What we have seen is the impact of the drought and the impact that that has had not only on our exports, but also, as the ABS have pointed out, in terms of our manufacturing. But with compensation of employees above 4%...
You're not taking responsibility for that, for toppling a leader at all?
Well,
it's not responsibility for driving down...
As I said, our strong jobs growth is something that is very significant. When we came to government and took over from the Labor Party, they left us with 5.7% unemployment. Today it's 5%, and it has fallen even faster than the Reserve Bank Governor said he expected it to do. We have seen free trade agreements expand the coverage of our two-way trade from 26% when we came to office to over 70% today. If the Labor Party, with their high taxing agenda, get their chance in government, what you'll see is lower wages, and what you'll see is less jobs and a weaker Australian economy.
Treasurer, do you trust your department, Treasurer?
Aren't you making the economy a hostage to your election campaign? The Prime Minister has been dancing around the question of whether Labor would drive the economy into recession. He's avoided saying that, but he's hinted at that repeatedly. Isn't that putting future growth at risk?
The Australian economy will continue to grow under this government. But what the Prime Minister has rightly pointed out is the stark contrast between us and the Labor Party. We're all about enterprise, they're all about envy. Look at them every day, bashing business, not recognising the fact that business creates 9 out of every 10 jobs in this country, trying to whack retirees who've done nothing wrong with a $55 billion tax. The Labor Party pose a huge risk to the Australian economy. Take the housing market. As we've seen, construction activity has fallen. And what we've heard from the Master Builders Association is under Labor's housing tax, you'll see 32,000 fewer homes being built and less jobs being created.
But those claims are a risk to the Australian economy, surely. The fact that you're painting the possibility of a Labor government coming to power.
Well, the Australian people need to know the truth and need to know how we are for a stronger economy and Bill Shorten is for a weaker economy. What this country needs, Michelle, is more jobs. What this country needs is lower taxes. What this country needs is more investment and more infrastructure. They're things that we are rolling out for the country and with the right results.
Mark.
Mark.
On your point that the Australian people need the truth, do you accept that you've been misleading in your use of Treasury advice on Labor's housing policy?
Well, Mark, let me tell you the truth. 5 days ago, this story appeared in the Financial Review under the headline with the same information. Negative gearing change could hurt property prices, Treasury. This is what Treasury said. ALP policies, and this, by the way, is a few years ago they provided the advice, in a different housing market. The ALP policies could introduce some downward pressure on property prices. Treasury went further and said, these are their words, could be particularly problematic if it coincides with weakness in the housing market. So the Labor Party have come up with a policy when the property market was going up. Now the property market is coming down, and Treasury have underlined the exact problem with Labor's policy. At a time when we're seeing 10% falls in key markets like Sydney and Melbourne, the Labor Party is promising to put in place a $32 billion housing tax which will abolish negative gearing as we know it and increase the capital gains tax by 50%, giving Australians a higher capital gains tax rate than they do in New Zealand or Canada, the US or elsewhere. Chris Bowen, who's been the master of this policy, yet to tell us when it will start date, even though it's been their policy for a number of years, bizarrely can't tell us when it's actually going to start, again providing uncertainty to the market. These are his words in a doorstop last year about the policy. Quote, "What we said consistently was that this was a policy designed to put downward pressure on prices." They're his words. The architect of the policy tells you that the policy is designed to put downward pressure on prices, and Bill Shorten has said the same thing. So if Australians want to see the value of their own home go down and their rents go up, vote for the Labor Party, because that's what they're going to do.
Treasurer, 3 months ago, you... Sorry, Andrew.
Thanks, Chair. Treasurer, just back on wages, we've had Bill Shorten today indicate his support for a living wage, saying the minimum wage is not keeping up with the cost of modern day living expenses. Are you at risk of being outgunned on wages policy, given that so many people are craving for a pay rise?
Well, Bill Shorten is lying to you about wages. Bill Shorten is lying to the Australian people about wages because his policies will see their wages fall. That's the view of the Centre for International Economics, the independent economic think tank, which found that their capital gains tax policy would drive wages down. We've seen from economic modelling about their energy policy, it will drive wages down. I mean, just think about it, Andrew. $200 billion of new taxes across the economy, a size of taxes which is not too dissimilar to the size of the New Zealand economy. That is going to dampen economic activity. When is Bill Shorten and Chris Bowen going to tell you about the secondary effects of their $200 billion of taxes? When are they going to tell you the impact on construction activity in the property market from their housing tax? When are they going to tell you the impact on capital formation in our publicly listed companies by their changes to the franking credit scheme? I mean, these are policies that are going to rip money out of hardworking mums and dads and retirees. They're going to see Australians pay more for their rent. I mean, a 1% increase in the public's rent could be a $250 a year increase. I mean, that's the purpose of their policy.
Treasurer, there's concerns about global trade weakening, which is essential for nominal GDP, which is essential for you getting a budget in surplus. Do you have any concerns about that, and are you relying too heavily on that part?
Well, in terms of trade, as you've seen, we continue to trade strongly. What is impacting on our exports is the drought, and particularly the impact that's having on farm GDP. Globally, our free trade agreements have created more opportunities. In fact, we've been in surplus in terms of our trade account for more than a year now, and that is a direct result of the free trade agreements that we've actually put in place. The US-China trade tensions obviously concern everybody, but that has started to be reduced. If US-China trade tensions were to increase, then that would impact on the global trading system. That's why we have always called for a rules-based, open trading system. That's why the Coalition stands for more free trade agreements. That's why we've signed them with China, with Korea, with Japan. The Trans-Pacific Partnership, with Bill Shorten said was dead, and now with the Indonesia FTA. You can't trust the Labor Party when it comes to trade. They don't believe in them, they won't sign them, they won't create jobs, and as a result, our economy will be weaker. Thank you very much.